Bitcoin is the most popular instrument among traders dealing in the cryptocurrency market. Since its first appearance in 2009, it has experienced exponential growth, and it remains the most commonly traded digital asset and holds significant profit potential for savvy investors. There's been a lot of excitement about Bitcoin in the financial market as it has caught the interest of many investors. All things considered, Bitcoin is a digital currency that functions in the online world. However, it may sound a bit suspicious and risky if you haven't heard about Bitcoin before. Bitcoin is a digital form of money that allows people to make exchanges without approaching to a third party like a bank. It's identified as the online currency of the modern era, based on its distinct characteristics. Unlike traditional digital currencies, you can't transfer it irreversibly because it's encrypted into computer languages. With Bitcoin, you can finish transactions instantly. Location isn't a big deal for Bitcoin as it runs through the nodes of a computer. Bitcoin becomes a fast global cryptocurrency as you can deal with any person from one corner to another. So in case you are thinking of investing in Bitcoin anytime soon, in today's video, we will be listing 10 lessons to learn from Bitcoin. But before we continue, do well to subscribe to our channel and click on the notification button.
Number 10.
Diversify. The most important Bitcoin trading point are those that focus on diminishing risk, and diversifying your profile is one such way. Too many first-time traders develop an obsession with Bitcoin's potential and fail to address its downfalls. By trading in other cryptocurrencies, you hedge your investments. If one falls in value, your loss may be offset from profit on another. Diversification can also boost your profits in good market conditions. If you've invested wisely, you could well find yourself holding multiple assets of high value. Number 9. Bitcoin is still experimental. Bitcoin is a new currency that is in active development. Each improvement makes Bitcoin more appealing, but also reveals new challenges as Bitcoin adoption grows. During these growing pains, you might encounter increased fees, slower confirmations, or even more severe issues. Be prepared for problems and consult a technical expert before making any major investments, but keep in mind that nobody can predict Bitcoin's future. Number 8. Bitcoin is not unidentified. All Bitcoin transactions are stored publicly and permanently on the network, which means anyone can see the balance and transactions of any Bitcoin address. Some effort is required to protect your privacy with Bitcoin. However, the identity of the user behind an address remains unknown until information is revealed during a purchase or in other circumstances. Always remember that it is your responsibility to adopt good practices in order to protect your privacy. This is one reason why Bitcoin addresses should only be used once. Number 7. Handle your emotions. Alongside Bitcoin, trading involves risk management and strategy. There are also emotional factors that you need to be aware of, most notably, the fear of missing out. Due to Bitcoin's extreme volatility, it is not unusual to see dramatic price spikes in a very short space of time, and it can be tempting to buy into an upward trend, fearing you'll miss out on major profit if you don't. However, this goes against the most basic rule of trading, which is buy low, sell high. If Bitcoin has skyrocketed, it's likely you've already missed the advantageous point of the upward trend, and you'll end up paying a premium for an asset that will inevitably decrease in value, placing you at a significant loss. Falling victim to fear of missing out is one of the main reasons so many beginner traders fail. Number 6. Bitcoin payments are irreversible. It is important to keep in mind the fact that Bitcoin transactions cannot be reversed. It can only be refunded by the person receiving the funds, which implies that maximum carefulness is required while transacting. Most importantly, try people and organizations you know and trust, or who have an established reputation. For their part, businesses need to keep track of the payment requests they are displaying to their customers. Bitcoin can detect typos and usually won't let you send money to an invalid address by mistake, but it's best to have controls in place for additional safety and redundancy. Number 5. Profit targets and stop-loss orders. As mentioned, Bitcoin is unpredictably volatile, more so than any other financial instrument, so it's vital to have a plan and stick to it. Before opening a position, consider what level of profit you would be happy to take from the trade, what losses you can afford to handle, and set your target and stop-loss levels right from the start. This is one of the most important things to note, as without a calculated approach it's all too easy to expose yourself to potentially devastating movement. Number 4. Bitcoin price is volatile. This is not a straightforward process, as many of the practices used to evaluate other financial markets do not apply to Bitcoin. The price of a Bitcoin can unpredictably increase or decrease over a short period of time due to its young economy, novel nature, and sometimes illiquid markets. Consequently, keeping your savings with Bitcoin is not recommended at this point. Bitcoin should be seen like a high-risk asset, and you should never store money that you cannot afford to lose with Bitcoin. If you receive payments with Bitcoin, many service providers can convert them to your local currency. Number 3. Decide on a trading strategy. Before you start thinking about opening a position, you should put careful thought into the type of trader you want to be. Whether you prefer making multiple trades per day for small profits, or enter and exit the market within 24 hours, taking advantage of short-term market movements, or you want to be a passive trader, holding on to your positions with a focus on long-term profit. This will depend largely on the amount of time you have to commit to trading activity and market analysis, and how quickly you're looking to turn a profit. Number 2. Choose a secure wallet. Your Bitcoin wallet is a holding pen for your digital assets, so it's important to choose wisely to ensure security and ease of access. There are multiple options out there, all with their own features and functionality. For beginner traders, it's advisable to trade through a reputable broker, such as Coinbase, and use the wallet they provide. If you're looking to choose your own wallet, though, you'll need to decide which type is right for you, whether hot wallets or cold wallets. Number 1. Starting small. One of the things you need to know about Bitcoin is to proceed with caution and start with a relatively small investment. Although it's an exciting market with a reputation for making the lucky few substantial profits in a short time frame, it is by no means easy to trade Bitcoin, and there's huge risk involved. Cryptocurrencies, in general, are extremely volatile. Opt for small stake trades that allow you to get a handle on the market with minimal risk. And remember, when it comes to Bitcoin, one of the rules is, never trade what you can't afford to lose. So this brings us to the end of this video. I hope you enjoyed the video and have learned something about Bitcoin, and if there's something you feel we missed, please feel free to make comment in the comment section, and don't forget to subscribe and click on the notification button for more videos.